All right, today we're diving into a story of some serious corporate guts. We're talking about how a regional spirits maker, Tilaknagar Industries, decided to bet its entire future on one single, absolutely massive acquisition. Let's get into it.
I mean, how do you do that? How does a company triple its size pretty much overnight? It sounds like something out of a business school textbook, right? But for Tilaknagar Industries, this was their real-life game plan. And, this wasn't just about getting bigger. It was a massive, high-stakes bet on a complete transformation.
You see, for decades, Tilaknagar was the undisputed king of brandy, especially down in South India. But the leadership team saw a huge problem looming on the horizon, and their solution? Well, it was an all-or-nothing gamble to completely reshape their identity.
And the price tag for this massive gamble, a jaw-dropping 4,150 crore rupees. That's what they paid to buy the whiskey brand Imperial Blue from the global giant Pernod Ricard. Now, for a company the size of Tilaknagar, this number was just astronomical.
So, what on earth would drive a company to make a move that risky? Well, to get that, we need to look at their core problem, a classic case of having way too many of your eggs in one basket. This slide really tells the whole story. An incredible 93% of their entire business came from just one category, brandy. Yeah, their Mansion House brand was a huge success, but in a market where tastes are always changing, being that dependent on one thing is a really dangerous game to play. And the rest didn't stop there. It was doubled down by geography. A whopping 90% of all their sales came from just 4 southern states. They were a regional champion for sure, but they were practically invisible in the rest of India. This created 2 huge points of failure: category risk and geographic risk. So, Tilaknagar needed one single move that could solve both of these problems at the same time. And the answer wasn't to build something new from scratch. No, it was to buy their way into the biggest spirits category in the entire country, whiskey. And this is where the move was just strategically brilliant. See, Imperial Blue wasn't just any whiskey. It was the number 3 best-selling whiskey in all of India, and it came with a powerful distribution network across the entire country. So with this one single deal, Tilaknagar could solve its dependency on both brandy and the South. Now, the deal itself was structured as something called a slump sale. Basically, instead of buying all the assets one by one, Tilaknagar bought the entire Imperial Blue business, the brand, the inventory, the network, the whole shebang, for one single lump sum. It's just a much faster, cleaner way to get a massive transaction like this done.
But let's be real. Buying a business that's 3 times your own size is anything but simple. So let's break down the incredible financial and operational gymnastics they had to perform to actually pull this off.
So how did they pay for it? Well, the funding was a pretty clever mix. About half of it came from new equity, money from investors. The other half was financed through long-term debt, with a little bit deferred for a few years. It's a classic leverage buyout, just on a scale we rarely see. And getting the money was just step one. The operational challenge was immense. Think about it. They had to absorb 22 million cases of new volume every year. That meant they had to expand key manufacturing facilities, like their Prague distillery, by 6 times. This was just a logistical mountain to climb. So they did it. They climbed the mountain. What does Tilaknagar Industries actually look like on the other side of this massive company-defining bet? Let's take a look. The change is it's night and day. Before, they were a successful but very limited South Indian brandy player. After, they're a true pan-India spirits competitor with the scale and the reach to challenge the biggest names in the industry. Their new sales mix is a complete 180. Brandy, which was once 93% of the business, is now a healthy 30%. The company is now driven by whiskey, which, let's face it, is where the real growth is in the Indian market. Their category risk? Poof, gone. And they're not just stopping with volume. The whole strategy now is something called premiumization, basically climbing the ladder to higher margin products. They're introducing more expensive, higher quality versions of their brandy and even launching brand new premium whiskeys like Seven Islands to capture more profit from every single bottle they sell. Of course, a bet this big doesn't come without enormous risk. It just can't. So for our final section, let's take an honest look at the road ahead for them. Okay, this right here is the biggest consequence of the whole deal.
The company's leverage, that's its debt compared to its earnings, has absolutely skyrocketed. Their debt-to-EBITDA ratio jumped from a super safe 0.17 to a much, much riskier 3.5. This leaves them with very little room for error. They have to generate enough cash to pay down this new mountain of debt.
And it's not just the debt. There are other serious headwinds they're facing. You've got the massive task of integrating such a huge new business, some legal issues in their key market of Andhra Pradesh, and an increase in shares pledged by the promoters, which means the owners are using their own shares as collateral for loans. And, of course, the constant threat of rising input costs. Any one of these could complicate things.
But alongside all that risk, there has been an absolutely incredible reward. For the investors who believed in the company's turnaround story, the 5-year stock return has been an astronomical 1,383%. And this quote from the chairman, Amit Dahanekar, just perfectly captures the vision. It's not just about selling more bottles. It's about fundamentally changing what the company is and where it can go. It's a crystal clear declaration of their ambition.
Which brings us right back to our final question. Tilaknagar has successfully pulled off a deal that tripled its size and solved its biggest strategic problems, but in doing so, it has taken on significant new risks. So, will this giant bet actually pay off and create India's next great spirits empire? Well, only time will tell.